Something I pointed out over the last week or so after reading a market read by Stephen Place was what the Aussie Japanese yen is doing, the carry trade. We put in a doji on Friday, and what I'm looking for is a red candle on Tuesday to signal a short-term top. All the EMAs are moving up. Things look good, but I'm just staying cautious because of a number of other things that I'll be pointing out. So short term, what I would anticipate is a move back down to the 20 period for starters, since we've been holding the 20 and the 10 period on the way up. Looking at the weekly, we can see we've really hustled up here to the top and got quite extended from the moving averages. So I don't expect this to continue bolting higher. The Japanese finance minister, I believe, is supposed to say something on Tuesday regarding inflationary policies and their current position on the markets, the yen in particular. So if this does turn over, that's bad for equities. Okay, so that's number one. Now let's take a look at the ES. Taking this high we put in September, down to the recent lows, we can see the 127 extension is up here at 14.95. It's a possibility we could continue to move a little bit higher, but I don't anticipate it's going to be much higher. Taking a look at the weekly, we have these trend lines. That we're getting very close to. And our lower level here, close to the 1404 level, which I've been talking about with regard to that point and figure level at 1404. So for this to move back down to 1404 before continuing higher seems plausible. No TSI is pointed higher. This is the weekly again. Looking at the fibs from this level here up to this breakout level that we pointed out last week, the 127 extensions right up here at 1490 and the upper trend line. So that's definitely what I'm focused on. Obviously, if we get through the 127 extension, the 1618 is up here. The euro, we've been seeing some congestion up here at these highs, putting in something of a flag. TSI is faltering somewhat, but it did turn back up on Friday. And our moving averages are down below us. Extending this over, let's see where our highs were. One of my apps from my iPad is Chinevsky's charting, and that's put in a sell signal on the Aussie Japanese yen pair. It's also put on the sell signal on the spiders. You can see here I posted that at 10:58 this morning. You can see where we've had sell signal here and what transpired, a buy signal here on this green candle. Okay, we had a nice run there before we had a sell signal, another buy signal, and now we're getting a sell signal here at spiders. So I'm starting to see some of the same things on charts and other information I'm going by. So that's number 3. Number 4, the comp, NASDAQ comp. We got a sell signal on it as well on Wednesday. And again, you can see what happened when we got the last sell signal. We had a little pop up and then we moved down pretty fast. We had a buy signal and you could have made this nice move higher here. So that's what, number 5? So let's take a look at the S&P 500. Now, Tom DeMark, a lot of people have been talking about him lately. This is a chart I posted on StockTwits earlier today. Let's see, where was it? It's right here at 1046. So if you want to look through and just reference this. I bought Jason Pearl's book and I read through it over the weekend. Very interesting read. And what DeMark uses for his what's called a 9, trading the 9s. Okay, so where you have consecutive closes higher than 4 candles previous. You have this March higher where you have 9 closes. Each close is 1, 2, 3, 4 closes higher than 4 candles previously, and this works up until you reach the 9th. And then you could continue with a sequential sell countdown, which starts at this candle and marches higher, and it's the 2 candles previous that the close has to be higher. So you can read, you can also go to my website, http://theclosingprint.com, and I have a piece in there under strategies about Tom DeMark. But we're currently in a similar situation where we've hit a 13 completion of a countdown on the S&P 500. So number 5 is the DeMark 9s that we put in since the low on this candle here on 11/16, where we started the 9 count. We got up to this candle here, so that starts the 1 count, and then we make our way up. This is a 7, and we skip until 8 because this is the next count. It's to the close below, the close above these 2 candles, and then we start again. You can skip candles on the continuation pattern to where we make ourselves up to this high here, which it needed to be above 1474.50, I believe. This high was 1485.16. So that's the 13 count. So now we look for the reversal signal, and we have 1496 point and figure level just above, and we have the previous 4 things that I pointed out that are starting to work against the S&P. We have this upper trend line, which is actually a little higher than it should be, that we could see at 1496, like the ES chart that I pointed out before. So this is what we need to be looking for this week. Alright, the 1490.46 level. This is the ES, obviously. The S&P 500 is a few points higher. The dollar, we're at this low here. Okay. We could see the dollar rally. We pointed out the euro. Okay, the consolidation that we have up here, and the fact that we could be putting in the shoulder, head, and turning over, dollar rallying, euro moving lower, and we could put in a little trough here before we put in the right shoulder. The next thing in my sequence is that we could be seeing some contrarian thoughts as far as mutual fund money that's flowing into same is the highest it's been since 2008, 1 week inflow. And typically investors, small investors, are wrong and mistime their mutual fund investments, as we all know. We've been talking about this in the room at Day Trader Bootcamp over the last week or so. So this article, if you wish to look at it, is at this link right here. Let's shift our focus and look at the sectors that were doing well this week. IYR did nice. We've got a bit of a doji. The IYT, same thing. We have a harami or inside day on the semiconductors. No surprise since the NASDAQ has a sell signal on it. XLB, we had a nice white candle on Friday. XLE's been doing well. XLF moving sideways for the better of a week and a half. XLI, XLK, XLP is on a march. XLU, which if you see this starting to move higher, that's an indication that money is rotating into safety. And we have consumer discretionary moving higher, as well as XLV healthcare. You want to watch these two as an indication of money moving into safety, XLU, XLV. The other thing is we're getting pretty far away from our moving averages. We haven't seen a pullback to the 20 period in some time for many of these sectors. So that's something else to watch for. The ones that are farthest away from the 20 period are more susceptible to a pullback and consolidation. So if you're going to go long, I would only do so in sectors that are either bouncing off of support like XLU over the since Wednesday. Okay, that's really the only one I see here, or XLK, okay, technology. But keep in mind that the composite is giving a sell signal. So I would look for setups there. And the way I would do that was go to FenViz. Shifting back over to the Aussie pair, Japanese yen. This is Yukarowitz's chart. And notice how crazy this looks like the weekly. It is the weekly. Outside of the Bollinger Bands, this trade is. Okay, so it's more of a risk that this is going to pull back than it is that it's going to go higher. Okay, and you look at the last few times that RSI got this overbought. What happened after that? Okay, we had the sideways consolidation here in 2007 through 2008, and then in here we had a big drop. Okay, so I'm expecting this to move back down very soon. So that's number 7. Going back to S&P, sorry I'm shifting around, but these are point and figure levels that you see here. Okay, so there's a point and figure level up here at 1496. There's also one above that at 1525. I don't have anything other than MAs here, stochastics and volume, which we saw was pretty significant these past 4 days and on Friday. But we're overbought, and if you look at the MACD, we're also overbought there. It looks like it's flattening out. So keep an eye on the MACD to tell you whether or not we can embed up here further. But what I wanted to point out was Fibonacci's, okay, like on the ES of this breakout level here. Okay, we have the 127 just above and between the 1525. So we're right up in this level here at 1507 if we manage to continue higher and not turn around. Okay. Turn the Bollinger Bands on, we can also see the upper Bollinger Band is right here at that upper trend line. And the lower Bollinger Band is pretty much flattening out, so it's saying if anything we're going to grind up. If this was turned down and this was turned up the way it is, then we would anticipate a faster move higher. Another way to look at the carry trade besides the Aussie Japanese yen is to look at the DBV Currency Harvest Fund and see that we're moving sideways, and we tested the 10 period EMA on Friday and again on Wednesday. We're overbought. There's a possibility we could move a little bit lower. The 50 period is right here, which is cruising up. This could be an area of a retest of that breakout, okay, as this moves higher and this rolls over. I think it's more likely that's going to happen, but if it moves higher, that's good for equities. If it moves lower, that's bad for equities. Copper, we've gone nowhere basically for 3 weeks. Okay, we tested the 20 period and the 10 period a number of times. We're overbought. We're gradually moving a little bit lower. So I'd keep an eye on this to see how this resolves. I would anticipate it would come back down. Now if it comes back down to the 50 period, this cyan colored line here, then we could anticipate the S&P moving lower as well. So that's number 8 for the bearish case. Cruising on over to my friend Ted's site. This is number 9. This is the industrials, and this level right here, the purple line, is 13,659. That's a point and figure level, and we've tested it twice before. That would be a triple top breakout if we manage to move above that on a spread triple top breakout on the point and figure charts. But a 3-box reversal is not uncommon and happens quite often actually. So if we get up to 13,650 and then turn back around, we could see it back down to 13,500 very quickly. Bullish percent is at 63.33 on the industrials. the comp is right at a point and figure level. Okay, it's dilly-dallying around there. We'll see what happens. And the 20 period looks like it's starting to make its change in its slope, so keep an eye on that as well. This could flatten out and turn over. Remember, on the Chernevsky's charts, those have issued a sell signal already. The 100 has already hit a point and figure level and pulled off of that on Thursday. S&P 100, we've got a level right up above, 675. That would be a spread triple top breakout, which I doubt would happen right now. The Russell, we're above that breakout level, above that 868.57, and that's all-time highs. The Russell, a 3-box reversal would bring us back down to the 860 levels, 865. So I would highly anticipate that's a very plausible possibility. Come back down and retest that breakout area. US dollar again, we closed above the 79.73 level, and we have the MAs bottoming there, and the very likely possibility of drawing a trend line across here that we could continue to bounce and move out of this level, take out these recent highs, okay, which would be bearish for equities as well. So that's number 10. And of course, the last thing I wanted to look at was the spiders on my Kumo chart. And we can see that Tenkan is flattening out as well as Kijun. So it's a possibility this flattens out further, that we could see a move back down at least to that level there. But remember, on the Chebyshev chart, that we have a sell signal on the spider already. And this is pretty accurate. I always watch this just for a trend following technique. Okay, so that's the spiders. All right. And the last thing that I will leave you with is, when markets top, it's generally on good news, not bad news. Okay? So I hope this helps. This is Cousin Vinny coming to you from Day Trader Bootcamp. Remember to come and check out your 2-week free trial and meet some of the traders in the room. Take care, and we'll see you on Tuesday.